The Morgan Report with David Morgan.
And David Morgan of themorganreport.com for the week ending January 27th, 2023. Well, 4 weeks into the new year. First up, from Mining MX, gold to surge through 2,000 an ounce as U.S. rates outlook provides lift. Gold is tipped to surge through 2,000 an ounce as macroeconomic headwinds that keep the metal in check last year are expected to ease. The macroeconomic backdrop is becoming increasingly bullish for gold, said Bank of America in a report out January 23rd. I'm 99% certain we'll definitely get above 2,000 an ounce in gold this year, and I wouldn't be surprised to get an all-time, in fact, I'm expecting an all-time nominal high, which needs to get to like 2,100 or thereabouts to make that. 2,300 I think is a pretty reasonable projection. And I'll leave it there for gold to go on to the next. Next up is from Bullion Vault, and a shout out to them. I really like what they put out in their news releases or press releases, whatever you want to call them, their missives. Gold to do well in U.S. recession as GOP tries to calm debt ceiling alarm. Talks about the recent activities in gold. I think the main takeaway from this article is that gold is a crisis hedge. Is it an inflation hedge? You can make the argument. Is it a deflation hedge? That argument was made in The Golden Constant by Professor Roy S. Jastrom years ago. And in that book that he looked at centuries of data and commodities versus gold, that gold actually did best in a deflation. However, the caveat is that during some of that time, the economies were on a gold standard. So you got to factor that in. Regardless, I don't think you have to think of gold as an inflation hedge or as a deflation hedge. You need to think of it as a crisis hedge. And the crisis, of course, is in the monetary/financial system. That's where the real crisis lies. And because of that fact, that's why you want to have precious metals. I've seen this meme played out over and over again. There's a little cartoon that I've used many times, Currency Wars, and it shows like a volleyball fence with the U.S. on one side and China on the other. And the U.S. is throwing gold bricks across the net, and the Chinese are throwing bundles of currency across the net. It's kind of a good metaphor or analogy for what's really going on. This article at Kitco, China steps up gold imports in 2022. No surprise. Swiss gold imports at a 4-year high, and Russia imports gold or imports rise. The amount of gold mining in China, I'm doing it from memory, I think it was up 13% internal last year. So the Chinese continue to buy, import gold, and mine more than they have in previous years. So gold's up to another 9-month high at 1928.60 an ounce. This article is on the 23rd from Coin News. And we are overbought. I do expect, again, some type of a correction. I don't know exactly when it will come. I'm pretty certain it'll happen before gold hits 2,000. But my tea leaves are only so accurate. But certainly longer term, even at this level, buying gold would be long term probably safe. I would probably wait to see, again, the wholesalers are really flush with metal right now on the silver side. And the premiums have dropped substantially. So there may be a time to just wait and see, or dollar cost average. And the 2023 bullion coins are coming out of the United States Mint. This is a look at the obverse and the reverse. And I think they changed the design a year or two ago, I think 2021. And there is going to be, I think, a drop in a premium even here for the approved dealers for the American Eagle. We will see. I put this out on my Twitter feed, but I'll repeat it here for the weekly perspective. This is from Shift Gold. India silver imports set a record in 2022. And it's a well-written article. I read the whole thing. You can look it up here later in the weekend. But India really was huge in silver. And as it became wealthier and more joined the middle class, they started buying more gold. But they've always been silver advocates, you might say, on a nation-state basis. And they certainly proved that with what they imported in 2022. This one I find interesting. It's from Yahoo Finance. The title, Silver ETFs likely to record huge upside in 2023. As Steve St. Angelo has pointed out, back in 2020, we had a huge amount of silver purchased on both the institutional side and on the retail side. It was, going from memory, I think it was 530 million ounces. And we only produce about 1 billion. That's with 850 mined and 150 round numbers recycled. So it was a huge amount. And what Steve pointed out was the amount of metal that went into the ETFs. I'm going to do conjecture only. There's no way to prove it, but this was back in 2020 when Scott Maynard, and God bless him, he's now deceased, but he did a bit of a push on silver at Davos, or now known as the WEF. And I think it was Bloomberg that was interviewing him and asked for his go-to investment in 2020, and he said silver. And then the commentator said not gold, and explained why silver was a much better buy than gold. And silver did well that year, and again, there was a lot of buying. So the way any market moves is buying pressure over selling pressure. If the institutions or large buyers come in through the ETFs, it will definitely take the price higher. I do expect silver to do well this year, but not exceedingly well. I hope I'm wrong. I'd like to see it get above 30 to 33 in that range. And if we can hold that and move higher, then there's not much upside resistance. So we could see 32 or so up to 40, 50 even, without a lot more buying, because again, there's not a lot of overhead, people holding on to $40 silver that can hardly wait to dump it. There's very little of that available as far as that price level. And you've got to remember, whenever a market makes a new high, the tendency is for people to hold their positions because they want it to go higher, which means there's no selling pressure. So any little bit of buying pressure will take the market higher and higher. This is true in commodities, it's true in stocks, it's true in ETFs, it's true in any marketable item that you can name. It's interesting seeing so many bullish articles on silver. I don't really recall seeing this kind of positive commentary, especially from like CNBC, talking about silver price touch a 9-year high in 2023 with bigger upside than gold. I think that will be true. Actually, silver did outperform gold in 2022, not by a wide margin. Gold was pretty much flat, and silver was up, I think, 3 or 4% year over year. But once these markets get going, and they are already going, but in a rather stealth way, I mean, gold's showing off a bit because of a 9-month high, but silver will overtake gold on a percentage basis at some point. So key points here, silver could hit a 9-year high of $30 per ounce this year and become a better performer than gold. And I just said that a minute ago. Insufficient supplies of silver, as well as its tendency to be a better performer than gold in periods of high inflation, are the reasons. So I want to point out a couple things as I continue on my weekly perspective. First of all, there was a commentary by CPM Group. I didn't actually listen to it, but I have a pretty good hunch, having followed CPM's work for a very long time. And the title had to do with the silver deficit. So let me explain the silver deficit. I think most of you are aware of it, but a deficit is when the total demand on silver or any commodity is greater than the supply. And the supply has to equal demand every year. How does that happen? Well, in silver, it happened because of the above ground stockpile. So from 1990, I know this short chart shows 1994, but from 1990 to about 2006, the silver was in a deficit of about 100 million ounces per year for 15 years. So the silver supply went from 2 billion ounces in 1990 to 500 million in 2005-06, in that range. And so a deficit, I think the best way to think of it, and you can think of it in other ways, is what is the above ground stockpile? Is it increasing or decreasing? From 1990 to 2006, it was decreasing. From 2006 to present day, it is increasing. Does that show a deficit the way I measure deficit? No. But you could make a strong argument that the amount of silver used for industry, jewelry, silverware, and investment is greater than the amount produced. And that is, sure, it's a deficit. It just means more is being held. So the point I want to make is this. If you can see my cursor, I'm at 2006, and the price was $10 an ounce. And that was the lowest amount of above ground silver, I'm talking commercial bars, in recent history. Yet the price was 10. And from 2006 until present, we have added to the above ground supply. But as we can see here, we've got 7, 8, 9, 10, 11, 5 years for it to hit a high. Well, why did it hit a high when the supply had gone up? And I forget the number. I don't know what it was. But it was much greater than 500 million ounces at that 5-year point. And yet the price went up. This market moves on supply and demand at the margin. And when people want silver as an investment for monetary hedging or safe haven purposes, it will take the price higher, regardless of what the above ground supply looks like. This is proof. I want to make this clear because a lot of people are enamored with, me pointing out for years about the deficit, and that does help. But the only thing that really moves a market, any market, is buying pressure or selling pressure. So I wouldn't be too concerned about, if the deficit is this or that. What you really want to pay attention to is really institutional purchases of silver above and beyond what the retail market does. Although with the advent of most recently, at least to my memory, Wall Street silver and so many more commenting in the silver market and showing you, the articles I just did from the mainstream, certainly the awareness around the silver market is far, far greater than it was back in, 2006, 5, 6, in that range. So I still expect silver to be good. It's not going to be a Tesla stock. It's not going to be, one of these huge home runs, although I think it will spike and be substantial, similar to what we saw. I mean, if you look at this chart, 2010, we ran up to almost 20, it looks like, and then back down to, looks like 15. And then we went from 15 all the way up to almost 50. And that was in a little more than a year's time. This looks like very early 2010. And we peaked, I think, the last day of April or first day of May 2011. There will be another parabolic move in silver. And I do believe it will be greater than the one I just showed you. And the trick will be, do we trade it for fiat or not? And I don't have that answer yet, but I will give you my thoughts on it when we get there. And lastly, I debated with myself whether I should even comment on this or not, but it's got the VRIC, Vancouver Resource Investment Conference moniker at the top, logo. I'm not sure it's even them. Maybe someone made it up. This has come to the silver community. This happens every now and again. Dozens of Wall Street silver community members submitted evidentiary pieces on their voices being heard for the first time. Things are getting worse for Wall Street silver. So it's an article. I won't even say it's a hit piece. It's first of all, I am free market thinking. I am in free speech. I think I've only blocked 2 people on my Twitter account in whatever it's been, 15 years. I don't know. It only takes so much, negativity, but 2 people out of the, 55, 60,000 that follow me on Twitter purportedly. Regardless, this came up. It's kind of made a circle on Twitter. I actually spoke to Jim Lewis. I actually gave Jim the keys to my Twitter account, and quite useful. He actually helped my Twitter account grow organically by probably more than 10,000 people. So there's that. I don't want to comment too much. My comment is this. I try to stick to principles and not personalities. I think the principle of sound money is pretty much evident for anyone that has followed me for very long. It's a position where in certain times in monetary history, you need it because there's a failure of the current system, which is what we're facing now. And that's the main thrust of what I've talked about for years. And I want people to think for themselves. And then things come up. I certainly took and have in the past and probably in the future take my own hits of someone that doesn't like what I said, wrote, or missed a call or whatever. We're all human. None of us are perfect. So this will blow over. I don't know all the facts. I've talked to Jim, met him in person. I've talked to Ivan many times. And I try to stay neutral on this stuff. Again, as long as I see it, it's about the overall silver market or monetary perspectives more than who's doing what or whatever. However, this stuff does cause contention, and sometimes course correction is needed. I think I made one public error that I wish I hadn't. I talked about silver staying around a $30 level, and I didn't add on to the end of the comment that there was a possibility one that could break lower, and that you should dollar cost average in. On the way up, I was very conservative. I told people during that 2011 spike to be darn careful. And I did call that top. The point being is none of us are perfect, but if you're willing to see what you've done wrong and course correct, so much better. I'm not saying Ivan or Jim did anything untoward because I really don't know all the facts, but I just thought I'd bring this to everyone's attention because it's been talked about so much, and I've gotten a few calls and comments and blah, 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 blah. I've been there, done that. I'll just make one more comment. When I called the top, there were a lot of silver people that were pretty upset with me and were making rather interesting comments that were more or less derogatory. And when it turned out to be accurate, I didn't get one apology that I recall. That, geez, you did hit it right. Whatever. I mean, I was getting stuff. Your reputation is going to be ruined. You'll never be able to enter the silver market again. You're going to lose all your followers, and a lot of negative things. But you just got to go with the flow and do your best. And I always have tried to do my best when it comes to these markets. So I'll leave it there. This is David Morgan of themorganreport.com signing out for the Weekly Perspective.